Okay, welcome back. We are on page 10, and we're just going to continue doing example 1, the statement of cash flow using the direct method. So, this is the statement of cash flow, direct, continued, for example 1. So, from page 7, we have cash provided by operating activities is $90,100. So now we do the other two sections. So we've got investing activities. So again, you're going to go back and look at all the things that have investing beside them. So there wasn't anything weird. We didn't purchase and sell land or a building or equipment, so they're all pretty straightforward. We've got 3 purchases. Purchased land for $70,000, and then just check it off. Purchased the building for $200,000 and check it off. And purchased equipment for $5,000. Now, that's all the purchases we have and everything we have from the section. So we can just total that up. Now, remember, these are negative because, and this you will remember from 315, these are uses of cash. If we would have sold land, sold buildings, sold equipment, they would be positive because we would have received cash. Okay? So that's why these are negative. So it's $275,000, and that's called cash used by investing activities. Now the final section is financing activities. Now, just looking at our long-term liabilities, we've got a mortgage payable. Now we said there was a payment also made on the mortgage. So we're going to split that into 2 pieces. So took out mortgage, and that was $155,000. That be positive or negative? Positive, because it's a source of cash. But then we made a mortgage payment. And that is our $155,000 minus $152,400, which is $2,600, and it's negative because we used up cash. Okay, then going further down, we've got bonds payable. So they went up, so we must have issued bonds payable because bonds payable increased for $10,000. And if we issue or sell bonds, we get cash, so again, it's positive. Now, you guys, you don't have to put the positives on, but you definitely have to put the negatives on, okay? Okay, going down into shareholders' equity, we've got issued common shares because shares went up. 8,000, and if we sell or issue common shares, we're getting money, so it's positive. Then we had dividends. Now, you will notice something. It says dividends paid are financing flows, so we know that already. But on the retained earnings statement on page 6, it says dividends declared, not paid. So, if they just declared and not paid, what account would we have up here? So, if these weren't paid, up here, there would be a dividends payable account. Since it isn't, there's no dividend payable account. So the dividends were paid. Okay? So watch for that. When you're dealing with dividends, if there's a dividend payable account, you've got to adjust for it. And I'll show you what I mean when we do this. So dividends paid were $8,000. It's a use of cash, so it's negative. Okay? Now, that's all that we had for financing. So we total that up to be $162,400. And that's called cash received from financing activities. So, speaking of the dividends paid, if dividends payable had gone up, subtract it. And that means if dividends payable went down, add it. Okay, so that's our statement of cash flow. Now we just have to finish the little part at the bottom. So we have our 3 sections. 1 is operating activities, 2 is investing, and 3 is financing. So sum those together. So 1 plus 2 plus 3 to get 22,000, and it's negative. Sorry, should have moved that up. And that'll be a decrease in cash. Technically cash and cash equivalents. So before we go, well actually no, let's finish off the statement, then I'll talk. So then we got to make sure it balances. You're going to put the beginning cash, cash equivalents, which is 59,000, and that's 37,000, which is your ending cash balance. And the last thing you do is you back and look at pigs and make sure that's what you ended with is 37,000. Yes, so we know at least we hit all the items. They might be misclassified, but at least we hit them all. Okay, that's how you do direct method statement of cash flows. So let me just talk about this and what it means, just as a little review. So from operations, which is the main bulk of our business, we earned 90,600. Okay. However, we purchased or invested in land, building, and equipment, which was a big outflow of cash. How did we pay for that? Well, we took out a mortgage, we issued some bonds, we issued some common shares, and then of course we paid dividends. So overall it was positive. So what we have is we have a negative cash flow this year. Some is coming from operating, which is good, right? It's always good to have a positive cash flow in operations. But we can explain this by saying, oh, look, we had to invest in all of these. We had no land, building, or equipment. Must be early on in our business. So it was an investment. We paid for it, and here's our cash flow. Okay? Now, in terms of page 7, what this tells the user, and this is why IFRS and ASPE recommend this, instead of, with the indirect method, starting with net income and making non-cash adjustments and doing all that, which to a user doesn't make sense, what it says is, well, we made $90,100 from operations in cash. So, where did it come from? Well, 602 came from revenue. We didn't have other revenue, so this was all sales. Our suppliers were paid $402,600. Our employees, a relatively small amount, $55,700. We had to pay interest, and here's our income tax expense. And that's how we got to the $90,600. So when you start comparing this company to other companies in the same industry, or comparing this company to previous years, you can see how things change. So hopefully that gives you an idea of what a statement of cash flows tells you. Hopefully it makes sense. The best thing to do is work on problems. This one, like I said, was straightforward. Some of the trickier ones will have you calculate stuff like in example 2 to figure out a purchase and a sale of a building, and so it will go in different pieces. Okay, so the big things to remember is show your negative amounts and make sure you check off all the items on your statements. Okay, that is it for chapter 22 and for the course. I will put up the completed notes, and if you have any questions, just let me know. Take care, you guys. Bye.